This is Nightly Business Report with Sue Herrera and Bill Griffin.
Triple threat. Stocks try to stage a rebound, but Apple, the banks, and Brexit push the market lower and keep investors in check.
Price hikes. Consumer inflation posts its biggest rise in 9 months, but it's unclear what might happen next.
Safe bet. PG&E admits it could be in financial trouble if it's found liable for one California wildfire. Are utilities a lot riskier than they once were? Those stories and more tonight on Nightly Business Report for Wednesday, November the 14th.
And good evening, everyone, and welcome. It happened twice in as many days. The major averages attempted to stage a rebound, but failed. Stocks opened higher today and yesterday, but the gains did not hold, and stocks fell because of a number of pressure points. First, Apple. The largest U.S. publicly traded company fell on a number of analyst downgrades. It is flirting with bear market territory, meaning it is about 20% off from its most recent high. It suffered a loss of more than $200 billion in market cap in that time. The stock now lower for 5 straight sessions.
And then there's the banking sector and the threat today from Washington of potential regulation. And that sent names like JP Morgan, Citi, and Goldman Sachs lower. Finally, there's Brexit, the dramatic day in London that left investors guessing on the outcome for hours. Combine it all, and you had a down day for stocks. The industrial average fell 205 points. That had more than a 500-point swing. We're at 25,080, its fourth straight decline and losing streak in 3 months. The NASDAQ was off by 64. The S&P slid by 20. Bob Pisani has more from the New York Stock Exchange.
It was another day and another early rally that fizzled out throughout the session. The Dow falling more than 350 points at one point, but ending well off of the lows. Tech and financial stocks led the losses in today's action. Apple tumbled another 3% amid a whirlwind of production concerns and analyst downgrades. It weighed on other tech names like NVIDIA and Qorvo. Qorvo is an Apple supplier. Apple stocks now fallen into bear market territory, down about 20% from recent highs, and it's now riding a 5-day losing streak. And now regulatory risk could be a new curveball for the market, as if we don't have enough to worry about. Representative Maxine Waters from California said easing banking regulations would come to an end when she takes up the helm as the chair of the House Financial Services Committee next year. Bank stocks, not surprisingly, immediately sold off on those remarks and brought the rest of the market down with them. Goldman Sachs, JP Morgan, Citigroup all fell about 2 to 3% apiece. Regional banks like Zions and Comerica also took a hit. We did get some help after 2 p.m. Eastern Time from UK Prime Minister Theresa May, who said she secured support for a Brexit deal for the UK to officially exit the European Union. But it's the bottom line. When you get technology and financials, the 2 biggest sectors in the S&P down, it's hard for the markets to hold up. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And there are also concerns in the market about global growth, and the latest data are showing some strains. Economic output in both Japan and Germany actually contracted in the third quarter. Separately, consumer spending in China hit its slowest pace in 5 months, and bank lending in that country also fell. And just yesterday, OPEC cut its forecast for global economic growth for the next year, saying the slowdown has become more accentuated lately.
Americans are paying more for a lot of things. Consumer inflation rose last month at its fastest pace in 9 months, and you can bet Federal Reserve policymakers are paying attention. Steve Leisman has the details.
Used car prices and the gasoline that goes into them combined to fuel inflation in October. But could it all be short-lived? The government reported that headline inflation was up 0.3% in the month, growing 2.5% year over year. Takeout food and energy and prices still rose a healthy 2.2%. But that headline number could decline in coming months with the recent fall in oil and gasoline prices and the strength of the dollar, which makes imports less expensive. Still, most economists think the Fed will keep hiking at the current inflation level.
Energy prices have come down, gas prices have fallen, so that'll take some of the steam out of top-line inflation. But abstracting from the ups and downs and all-arounds in energy and food prices, underlying core inflation will continue to accelerate. Labor market's very tight, wage growth is picking up, we've got those tariffs, so I expect higher inflation dead ahead.
Meanwhile, economists at Oxford Economics wrote, quote, with solid economic momentum supported by fiscal stimulus coupled with increasing import tariffs and firms' greater pricing power, we foresee another Fed rate hike before the end of the year. We look for 3 rate hikes next year. A wild card is how companies deal with rising prices. CNBC reviewed the vast majority of the S&P 500 earnings calls, finding inflation mentioned by 33% of companies compared to the 10-year average of 26%. A sign perhaps that inflation is a bigger issue for companies than it normally is. Transportation and freight, wages and material costs, and tariffs were the leading reasons cited for higher prices. Companies as diverse as Kellogg's, PPG, O'Reilly Automotive, and Fortune Brands Home and Security were forced to deal with inflationary prices. Some companies passed along these costs to consumers, others boosted productivity to reduce their costs, and some companies couldn't avoid taking hits to their earnings. Now, companies could get relief in coming months from lower fuel prices, but the problems of tariffs and higher wages, they don't look likely to go away anytime soon. For Nightly Business Report, I'm Steve Leisman.
Oil prices rebounded today, recovering ever so slightly from that record 12-day losing streak. But some veteran traders are still stunned by the dramatic selling in recent days. Today, domestic crude settled around $56 a barrel. And then late today, a new report showed an increase in inventories, which just highlighted the ongoing oversupply concerns that have been plaguing that market. But it's a very different story for natural gas prices, which have been rallying dramatically. The drivers there have been cold weather forecasts and concerns about tight supplies. Nat gas today hit a 4-year high, and prices are up about 40% just since the beginning of November.
A California utility is in focus as the fires in the state rage on. PG&E warned that it could face, quote, significant liability in the event that its equipment is found to have caused the deadly blaze. Shares plunged 21% in today's trading, and they've been just about cut in half the past week. Aditi Roy is following the story for us from San Francisco.
Amid California's deadly wildfires, there's new scrutiny on California utility companies. In a new SEC filing, PG&E reports that if the utility is held responsible for the Camp Fire, which is the deadliest and most destructive wildfire in California history, the cost of the damage would exceed its insurance coverage. Shares plummeted upon the news. Moody's said in a note this week that the magnitude of the fire's destruction leads us to believe the potential liabilities could be material for PG&E. In the last 5 days, PG&E shares have dropped 48%. And shares of Edison International, which owns Southern California Edison, which could be held liable in the Woolsey fire, are down 22% in the last 5 days. Both utilities reported malfunctions to regulators, which started shortly before the fires began. PG&E has already been held liable for 17 Northern California fires last year. In regulatory filings, PG&E says it took a $2.5 billion non-cash charge for 14 of those fires. The company's cash position is currently under industry averages.
In a statement, PG&E says it will cooperate with the investigations and that the cause of the Camp Fire has not yet been determined. For Nightly Business Report, I'm Aditi Roy, San Francisco.
And it's not just the wildfires raging in California. Utilities have also been plagued by hurricanes in the east, tornadoes in the Midwest, among other natural and man-made disasters. So are utility stocks riskier than they used to be? Joining us tonight, Travis Miller. He's utility strategist at Morningstar. Travis, thanks for joining us tonight.
Good evening. Thank you.
Utilities used to be seen as a very stable investment. Then came deregulation. And now we've got these natural disasters that seem to be plaguing these companies more and more lately. What do you make of all of this?
Yeah, I mean, from hurricanes to obviously the situation out in California to tornadoes to floods. But we've seen a lot of natural disasters affecting utilities. It just emphasizes that utilities can be a risky place to play on an operational basis, but that does differ on an investment basis. We think investors should be aware of those risks.
So you have to do your homework perhaps in a different way than you used to about utilities and really take a look at where they're located, what their exposure is, if it's a parent company, what utilities they may own, correct?
Yes, correct. It's very important for investors to do their due diligence and absolutely not just assess the regulatory risk, but also the operational risk, perhaps even the natural disaster risk, all of the risks that you would typically associate with an investment, but then also utilities, you have to assess another level of risk as well.
What do you make of what PG&E is going through right now? And they don't even pay a dividend. They suspended that last year, so you can't look at them for their yield. And now the stock has been pretty much cut in half here.
Yeah, PG&E is definitely in a tough spot. Not only do they have the liabilities outstanding, but when you look at where the stock has gone, the fact, like you said, that they don't pay a dividend, you have had a huge outflow most likely in utilities, your typical utilities investors, and that's even adding to the downturn in the stock price.
What utility stocks do you think are a little bit more immune to some of the events by Mother Nature that we've talked about in this segment? What names do you like?
Sure, we see a couple. One, they're going to be classified in the high operational category, the category where management teams are very good. Dominion Energy is one of those that we like. We also see some value in the high yielding names. So you look at yields above 4% with, again, Dominion, Duke Energy, PPL. Those names, they have less of the natural disaster risk, good management teams, and certainly good income properties for those typical utilities investors.
Travis Miller with Morningstar. Again, thanks for joining us tonight. Appreciate it.
Sure, thanks.
Time to take a look at some of today's upgrades and downgrades. Kellogg was downgraded to neutral from overweight at JP Morgan. The analyst says Kellogg's Analyst Day did little to bolster confidence in an earnings turnaround. The price target is $66. The shares fell about 1.5% to $62.46. Tenneco was downgraded to underweight from equal weight at Morgan Stanley. The analyst cites an increasingly uncertain environment for auto suppliers. The price target is $30, but the stock rose in today's session to $33.86. ConAgra was downgraded to underperform from market perform at Bernstein. The analyst there says growth in the company's frozen foods unit appears to be running out of steam. The price target is $31. The stock fell 7% to $32.64.
Still ahead, are small cap stocks due for some big gains or some big pains? Uber's growth slowed in the most recent quarter, and its losses reached nearly $1 billion. Some analysts attributed that slowdown to Uber's recent moves into food delivery, bikes, and scooters. The ride-sharing pioneer is still scheduled for a highly anticipated IPO next year, which some bankers are saying could value the company at $120 billion. That's nearly double its last reported private valuation of $62 billion.
A better than expected earnings report from Cisco could potentially set the tone for tomorrow. The Dow component earned 75 cents a share, and that is 3 cents better than estimates. Cisco logged another quarter of revenue growth, which was up 7% from a year ago to $13 billion. And investors were upbeat, sending shares higher in initial after-hours trading. Josh Lipton focuses in on Cisco's quarterly results.
Cisco investors pay close attention to the infrastructure platform segment, which rose 10% to a better than expected $7.6 billion. That's the company's core networking offerings related to switching and routing. Piper Jaffray's Jim Fish says that's important because it shows that Cisco's core on-premise business is alive and well, and that does account for the bulk of Cisco's business. Fish also notes that deferred revenue was down in the quarter, but he says that's likely due to new accounting changes. For Nightly Business Report, I'm Josh Lipton, San Francisco.
Macy's profits were stronger than expected. The retailer said more customers actually made purchases on their smartphones during the quarter. Total revenue grew, but it was shy of Wall Street's expectations, and that miss apparently sent shares down by about 7% today. Now, while there were points of strength during the quarter, there were also areas of weakness. And Courtney Reagan reports for us tonight.
Macy's momentum continues. The department store reporting growth in comparable sales for the fourth straight quarter and expects the streak to continue into the all-important holiday season. The quarter got stronger in both sales and foot traffic as the weather got colder. And Macy's online sales grew double digits for the 37th straight quarter. As the retailer reins in discounts, at least to a degree, the consumer keeps buying, even if at higher prices. Macy's again upping its forecast, expecting sales and earnings to strengthen further into the fourth quarter. Macy's CEO Jeff Gennette told me he thinks the retailer will beat last year's holiday season sales growth rate, which was when its winning streak began. Gennette says, quote, "The backdrop for consumer spending is good. Their confidence is strong. The .com business is really humming and our penetration is higher in the fourth quarter. For stores, we're going into the fourth quarter in a healthy place with momentum." But some analysts and investors aren't convinced the winning streak can continue.
They're investing in their stores after a few years of investing in e-commerce, and the stores seem to be moving along, and those things are getting sequentially better as we go, and they expect them to keep getting better in fourth quarter. So they're doing a nice job with that. But, you know, the market's looking at this saying, you know, is this as good as it's going to get?
There are headwinds. Macy's says sales to tourists went negative in the third quarter, weakening throughout the year. Plus, a number of costs are on the rise.
Comparisons are a lot tougher, and you have the larger picture volatility out there, whether it's housing, rising costs of doing business, which are wages and freight.
So while Macy's CEO is confident about the consumer and his company's place on holiday shopping lists a week before Thanksgiving and Black Friday, others say, show me. For Nightly Business Report, I'm Courtney Reagan.
Spending surges at a cannabis company, and that's where we begin tonight's market focus. Canadian firm Canopy Growth ramped up spending ahead of the legalization of recreational marijuana in an effort to meet demand and fend off competition. But it resulted in a wider than expected quarterly loss, and that resulted in a decline in its shares. They fell 10% to $34.30. Canada Goose topped profit estimates in the quarter as direct-to-consumer revenue more than doubled, and that prompted the luxury winter coat maker to raise its full-year forecast. The company says it's now in a strong position ahead of its peak selling season. Shares rose 10% to $64.45. Merck's blockbuster drug Keytruda met the main goal of a late-stage esophageal cancer trial. The company plans to present the full results at an upcoming medical meeting. Keytruda is Merck's top-selling drug and has already been approved to treat several forms of cancer. Merck shares fell a fraction to $74.09.
SurveyMonkey reported a 20% increase in revenue during its first quarter as a publicly traded company. The online survey development company cited strong sales to enterprise clients, and it projected incrementally higher revenue for the fourth quarter as well. So shares popped by 13% today to $12.77. Snap says that the Department of Justice is investigating its initial public offering. Late yesterday, Snapchat's parent company said that regulators are examining whether it made potentially misleading claims in its March of 2017 filing. Snap shares fell more than 3% today to $6.48. And Berkshire Hathaway said that it has taken positions in JP Morgan Chase and Oracle. The conglomerate owns about 35 million shares of JP Morgan, valuing that investment at about $4 billion, and more than 40 million Oracle shares, which are valued at about $2 billion. All three companies saw their shares finish lower in today's session.
Well, it has been a wild ride for small cap stocks this year. The Russell 2000, an index of small cap companies, is in correction territory. It's down about 12% over the past 3 months, and it's raising concerns of more weakness ahead. Chris Retzler, co-portfolio manager of the Needham Small Cap Growth Fund, joins us now with his take on that. Good to see you, Chris. Welcome.
Thank you. Thanks for having me.
So what is your take on this? I mean, the small caps are a little bit less liquid than some of the larger stocks, but I think if you're a long-term investor, you're still bullish on the sector.
Look, we're bullish on America. We think small caps are a great place to be long-term. We are going through a bit of a cycle now. The economy is, we believe, going to slow a little bit after some really great earnings that we saw earlier in the year where they were benefiting from the tax overhaul, cash repatriation, and deregulation. But we begin to annualize some of those benefits, so we could begin to see somewhat of an earnings recession, not an economic recession. But for a stock picker, that's a great opportunity. There's greater volatility coming back into the marketplace, as the Federal Reserve is raising rates and kind of taking stimulus out of the market. But that's where the opportunities begin to occur for folks like us.
It's a big group, obviously, the small caps. Are there sectors that you like more than others, or do you have to do this on a company-by-company basis?
Well, you really do have to do it on a company-by-company basis as a stock picker like ourselves. However, we like to spend a lot of time in the technology area where there's technological moats that companies have built for their services and products, which can be defendable on a global basis. Clearly, a lot of small caps in this market are having a little bit more impact from the global trade as opposed to 15 or 20 years ago when they weren't as global. But in this market, those with good technological moats should still do very well.
And you gave us two names that you like, Ultra Clean and Photronics. I assume they have good moats.
They do. They're both in the semi-cap equipment space, which we think is coming to the bottom of its cycle here. It's been correcting for the last 6 to 9 months. We think there's great opportunity. The valuations are in good spots. And long term, they are essential in the manufacturing of semiconductors, which again are also having a difficult time right now, but are always a bigger part of our economy, whether it's automotive, industrial, handsets. Those trends are not going away longer term. So we think for long-term investors, it's time to do diligence in those types of names.
All right, and buy on the dip, perhaps. Thanks, Chris.
Thank you.
Nice to see you. Chris Retzler with the Needham Small Cap Growth Fund. Coming up, we're talking turkey. With inflation picking up, will a traditional Thanksgiving dinner have an unconventional price tag?
Here's a look at what to watch for tomorrow. Dow component Walmart is set to report its earnings. Investors will want to see what the world's largest retailer expects from the upcoming holiday shopping season. The release of retail sales overall will tell us if consumers opened their wallets last month. The Fed's vice chair will appear before the Senate Banking Committee to testify on banking regulation. A busy day coming up on Thursday.
The U.S. Postal Service reported a loss for the 12th straight year. The agency said an increase in wages and transportation costs outpaced revenue growth, and costs tied to the Postal Service's pension and health care obligations were a headwind. In an attempt to stem some of those losses, regulators have approved the agency's request for price increases. The price of a Forever stamp will now rise from 50 cents to 55 cents.
Blue jean maker Levi Strauss is reportedly planning an initial public offering. CNBC reports that the 145-year-old company is seeking to raise as much as $800 million. It could go public in the first quarter of next year. The maker of Levi's jeans is hoping to make its public debut with a valuation of about $5 billion. The company went public, by the way, for a short period of time way back in 1971.
Well, fewer people recently applied for a mortgage as rising interest rates and increased volatility in the stock market may have been the culprits keeping potential homebuyers on the sidelines. Mortgage application volume fell more than 3% last week compared with the previous week, but volume was down 22% compared to the same period last year.
Well, with consumer inflation seeing its biggest gain in about 9 months, what does that mean for next week's Thanksgiving dinner, you ask? Will shoppers face sticker shock at the grocery store? Jane Wells did a little digging to find out for us.
The American Farm Bureau Federation every year comes out with the cost to feed 10 people for Thanksgiving. And last year they said it was going to be like $49. Really? Were you able to feed 10 people on Thanksgiving for under 50 bucks? Have you ever been able to do that? So this year we took matters into our own hands and we did our own price checks across the country from coast to coast. Here's what's interesting. Even though inflation is up, we found that the cost of most of what you see here is actually less than it was a year ago. Let's start over here with the turkey. Now the turkey It's about the same as it was a year ago. Prices are all over the place right now this time of year, but on average, a 16-pound turkey right now is going to cost you $24. But everything else costs less. Green beans are less, potatoes are less, cranberries are less. Milk prices are down 10% from a year ago. Even sweet potato prices are lower. And this really surprised us because we covered Hurricane Florence damage in North Carolina on sweet potato farms. We thought that would mean sweet potato prices would go up, but the USDA says prices are actually down right now on the retail level, 30% from a year ago. So perhaps losses in one place were made up with a bumper crop somewhere else. A couple things do cost more than they did a year ago. Pumpkin pie filling is up 9%, eggs are up 16%. And if you're buying organic, well, even those prices in general are trending down, except organic potatoes are way up. And for a comparison on the cost of a turkey, for a conventional turkey, like I said, about $24 for a 16-pound. If you're going organic, it's going to cost twice that. Actually, more than twice that, $56. For Nightly Business Report, I'm Jane Wells in Los Angeles. Happy Thanksgiving.
To you too, Jane. And finally tonight, it looks like Thanksgiving will be the busiest ever for air travel. An airline trade group projects a record 30.5 million people will travel on U.S. airlines during a 12-day window around that holiday. That's up from an estimated 29 million that flew a year ago. Busiest travel day expected to be the Sunday after Thanksgiving, November 25th.
And before we go, another final look on the day on Wall. Another volatile day on the Dow, down 205 points. Its fourth straight decline. Longest losing streak in 3 months. The NASDAQ was down 64. The S&P was down 20.
So stay tuned for tomorrow, right?
Happens.
That'll do it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a wonderful evening. We'll see you tomorrow.